Kirk Duckwell here with Mastermind the Market, your real estate stats update for the Twin Cities area. Well, are we now in a buyer's market or still in a seller's market? We'll dive into that in just 1 second. But first, if you like these videos, make sure you click on the like and subscribe if you have not already. And please feel free to share these out if you find them helpful. All right, let's dive into the data and take a look at what's going on in our market. I'm going to go a little different order here, starting off with association stats. New listings into the marketplace dropping off week over week, was at 1406 down to 1340. As far as new listings, we're following the ebbs and flows of last year almost spot on, just at a lower pace. So we can see last year we were at 1478 and again 1340 into the market. Pending sales up slightly over the week before, was at 1,027 up to 1,077. And inventory, this is what's keeping the market in a pace that was faster than last year. We'll talk more about that in a second here. Yeah, so inventory at 7,972. Now, what's really interesting here is this is like the lowest peak inventory that we've experienced. Like you can go back to 2021, which is a very slow year, and we look at July, and it was 8,330. And we're at 7,842. And we'll talk about what that means here in a couple of minutes. Okay, taking a look at some of the other data points in the market is the sale price dropped off over last month, was at 382 down to 375 on the median, but average is actually up, went from 447 up to 451. So why is this happening? Well, I dug in, and we're seeing movement is actually in the homes at higher price points are gaining, where kind of the mid-price range is staying relatively flat, if not down a little bit. So the higher market is making that average sale price go up. So overall, though, pretty flat when we look at things. So looking at kind of the velocity in the marketplace, showings per week per listing, median sale price range 250 to 500K, average number of showings that are taking place 4.4 down to 4.15. This is in comparison to last year's 3.77. So we are tracking ahead of last year by 9%. However, total showings is down a little bit. So it was at 2,813 down to 2,786 in comparison to last year's 3,120. So we're down by about 11% there. So why are we seeing this going down even though total showings are going down? Well, it's that inventory gap again. So that is keeping our market going. A couple other notable points. Market meter moves from a 615 to a 592. And days on market for areas tracked is staying stable at about 17. So 17.3 was the previous week, 17.4 this last week. Foreclosures tracking for Hennepin County, relatively stable week over week as well. Okay, so market meter going from a 615 down to a 592. So on our market meter scale, well, it actually puts us in a balanced market is where we're going to. So we were in a mild seller's market range, now into that balanced market territory. When we look at the weekly chart, we can see here just dipping down. Now, what can change that is we've seen the market kind of fluctuating based on interest rates. So we've seen interest rates, this is the bond market, big spike last week in the bond market. This pushed interest rates back above 7% again. And when we see that, we see the market slow down. With the really low inventory, though, what's interesting here is if we see interest rates go back down into the sixes, that could actually throw our market back into a seller's market. And with that very low inventory, if rates, let's say, get down into the fives within the next couple of months, then we could actually see a really strong, for sellers, not so great for buyers, fall market. So for buyers, yes, rates are up a little bit, but you might have the best opportunity over the next 30 days or maybe more depending on where rates go, for some of the best deal hunting out there in the marketplace. Because if we do see rates go down with this really low inventory, we're either going to set ourselves up for a very strong fall, which could then also mean a very strong spring, or again, a really strong spring market. So hopefully you found this information valuable. Right now we're seeing rates floating right at about that 7.25 for a 30-year conventional at I think 5% down. Obviously, everybody's individual on that. So if you are out shopping, check your rates. But if those rates do move back down, things could get competitive. Take care. Have a great week.